A limited liability company is different than a traditional corporation. It can structure the relationship between the company and its personnel in ways that a corporation can't. But does an LLC manager owe the same fiduciary duty that a corporation's director or officer owes? A Delaware Chancery Court considered that question in Auriga Capital Corporation versus Gatz Properties Limited Liability Company. The Gatz family owned farmland that William Gatz wanted to turn into a profitable golf course. He approached Auriga Capital Corporation, which agreed to invest and secure other financing. William established Gatz Properties LLC with William as primary member and manager. Gatz Properties took title to the property and leased it to Peconic Bay LLC. Gatz Properties, William, and other family members owned a majority of Peconic Bay. Gatz Properties was manager of Peconic Bay, and William acted on behalf of Gatz Properties in managing Peconic Bay. Auriga Capital Corporation was a minority investor in Peconic Bay. The Peconic Bay Limited Liability Agreement provided that a manager could enter into a self-dealing transaction only by proving its terms were fair. The agreement specifically didn't protect the manager for bad faith action, willful misconduct, or gross negligence. Peconic Bay sublet the premises to American Golf Corporation, a golf course operator. They built a first-rate course and clubhouse, and its location held great promise. But the course never made a profit, and American Golf let the course fall into disrepair. As early as 2004, William understood that American Golf would exercise its first termination option in 2010. But William didn't try to secure the course's future or search for a new management company. And when a viable buyer expressed interest in buying Peconic Bay, William actively discouraged the buyer, withholding due diligence and providing misleading information. Having thus undermined Peconic Bay's value, William made a lowball offer to Auriga and the other members, seeking to buy them out so he could profitably sell the real estate to residential developers. When the other members refused, William put Peconic Bay up for auction without marketing it or providing relevant information to potential buyers. William thus positioned himself as the only bidder, bidding only a little more than Peconic Bay's debt. The minority investors received a tiny fraction of their investment back. Auriga Capital and other minority investors sued William Gatz and Gatz Properties in the Delaware Chancery Court for breach of its fiduciary duty to Peconic Bay's other members. William responded that he didn't owe any fiduciary duty.